the Cedi Miracle. And I know many of you have been wondering what really is happening to our city. It's been a long time since we've seen this drastic rise of the cedi against all the major currencies, by the way. We've been talking a lot about the cedi's performance against the dollar, but I'm going to show you that the cedi is holding firm and actually outperforming all our major trading currencies, not only the dollar. And that is why tonight we're terming this the Cedi Miracle. But there are two fundamental things you need to look at whilst you talk about this. You need to account for the appreciation. Let's talk about what is causing this. And then you ask a fundamental question about sustaining the gains. Let's look at it. Currently, as far as the US dollar is concerned, which is the ultimate trading currency for us, it has appreciated by 11%. So that is significant. We're talking about appreciation for this particular year, 2025, so January to date, 11%. And one of the things that you will notice when I begin to break this down a bit more is that this appreciation has happened with a very small window. There was a long period of stability and a very sharp appreciation. Fascinating indeed. The cedi is really performing miracles, not only against the dollar, but against all our trading currencies. And here's the point to note. And you will notice that we started off in July 2024 at 13.9. And as we approached elections, it climbed and climbed and climbed, and we got to November 2024, where it was a 16.4. So that was very, very high. Crossed the 16 mark and inching towards 17. It was devastating for many people. And then it began to drop. To January, it came to 14.6, which is a very important point to know, because something then began to happen after the 14.6 that you see here. You see this prolonged period of stability between March 2025, just after January, by the way, just after January, talking about January and March all the way to, say, early May. It was a prolonged period of stability. And if you talk to those who trade, those who import a lot, they will tell you that one of the things that they look forward to, that they cherish more, is stability. But you see there, right after January to May, January, February, March, April, May, we are talking about over a 4-month period. It held steady. It held on an average 15 cedis to the dollar, right? Which was very good. And then something even more dramatic, something even more positive, that miracle began to happen, which is it began to appreciate quite dramatically towards we are in May, right? At the beginning of May, it began to appreciate quite dramatically. To the point now we are talking about some 12.9. When it used to be at 15.5, it's now come to 12.9. I was thinking tonight it's possibly going to be around 13, but it's dropped all the way in terms of its appreciation to 12.9, which is fascinating, by the way. The last time we had this was in, if you look at here, December 2022, when it dropped all the way from 14.3 to 9 cedis to the dollar, which was fascinating at the time. Remember, if you recall at the time, again, it was one of those times that you was just unbelievable. When it had climbed to 14, it dropped very sharply towards the end of the year. In 2022, November, it started climbing all the way to 14 in terms of its depreciation. There was a lot of, hue and cry around this. And then just in November, it drops to all the way to 9 cedis to the dollar. And it began to climb again, right? So it didn't hold at the time. And that is why the fundamental question about sustaining this gain is very important. Because then when it happened, it didn't hold. It started climbing back up and went all the way up to 16.2. That's when it began to drop again. But one thing you cannot ignore, what is unique about what is happening now, is the long period of stability, which I showed you from right after January to early May, and then there's very sharp appreciation. That period of stability tells you that something fundamentally was happening. But the key question that many have asked is, has anything changed fundamentally about the economy? Is this a deliberate policy intervention by the government? And some of the economists who are joining us believe there is something very deliberate happening, which is leading to this, because this doesn't just happen. And some have dismissed this to say, but it's only because of Trump's flip-flopping on the tariffs question, but also unpredictability and what it's doing to the global economy that has led to the weakening of the dollar. And that is why we are seeing the city's strong performance. Well, the evidence suggests otherwise. Let me show you. Because if you come to the other currencies, you're doing great as well. I'll show you that. But I want to tell you one of the key things that, of course, is contributing to what you're seeing. The first thing is gold export revenues, which have been great, right? Number one, gold export. You see the gold here doing great. You also see cocoa, gold, cocoa going up in terms of our export revenues going up. And so that is already shoring up the city in terms of what you're getting, right? So that is key. That's number one to note in terms of why we are seeing it perform so well against the dollar. And when we export gold, we bring in dollars. When you export cocoa, you bring in dollars. And that is why I'm isolating this first, because I'll come to the other currencies to show you the point about how it relates to the other trading currencies, so that people then begin to answer the question, is it really a case of just, as many put this down to, just Trump's actions weakening the dollar, or something more fundamental is happening to the economy? And then you also look at remittance. Remittance has been going up too, also climbing up. So a lot of our folks in the diaspora are sending down money in droves, and that also provides some cushion. Your forex your store is significant, and if that happens, less pressure on the city. Why does the city depreciate so much? Because if you have more cities chasing fewer dollars in the system, that tends to constrict, and it pushes the price, or it pushes the value of the dollar up, depreciates the city. But if you have more dollars in the system, as simple as that, you don't have that problem, because really there's a glut of dollars in the system. It shows that the city is strong enough, and you're going to have that particular challenge. That's fundamentally what accounts for this. If you go to the black market and they don't have dollars, what tends to happen is then they shoot the price up. You have shortage, it always leads to price increases. And in the case of the dollar, it affects forex, the rate at which the city depreciates. So one big thing also is the gold reserves also improving over the period. So important. The fourth point that we put this miracle down to, increased forex supply by BOG, weaker US dollar, of course, is an important point. But if you look at those other 4 points, very deliberate government policy. Their remittances obviously out of government's hands, but you see that is a factor. Strong BOG gold reserves, again, a strong factor. And then you also have increases in forex supply by the BOG, very deliberate one indeed. Weaker US, you don't have control over that. And then we'll look at what that means for the other trading currencies. But if you look at the January to February total export trend, that is what I'm talking about. Total export trend is $4.3 billion. So our total exports have all gone up. And once you do that, you increase your reserves quite significantly. Your balance of payment is improved and is healthy. That then leads to a stronger city. That is a very important point. If people want dollars to import, it's easy to find. They don't have to struggle. It adds up to that. And then you look at cocoa exports. Again, I made a point. It was $639 million in 2024. We're talking about already 835 million. So that, again, is bringing a bit more money into the economy. And then you look at injection of forex, 490 that the BOG had put in. And they explained to us that this amount they pumped into the economy was to take care of energy costs. That, the cost of energy, a lot of the things that we're importing in terms of fuel, etc., to power our gen sets and our thermal plants, they're spending on this to import them and giving it to the BDCs to make the import. So that, again, once you have this much into the system, those who needed to bring in the needed imports get it, and it affects positively the strength of the city. But this is the point I was making earlier about its performance, the city's performance against pound. You also see this long period of sustained climb all the way to 20. This is the city to the pound. It depreciated quite significantly, right? It was at 18.2. If you look at it somewhere in January, and it began to climb very sharply, very alarmingly indeed, all the way to 20.6, the pound. And look at that sharp drop we're looking at now in May. From 20.6, is down to 17. So again, the cedi is doing well against the pound. It is also doing well if you look at it, the euro, but the cedi dynamic. Same trend, if this is the pound, same trend. You see, again, in 15.1 to the euro, climbed all the way to 17.7 to the euro, and then sharp appreciation all the way to 14.3. So that tells you that against all our major trading currencies, the cedi is doing well. So it is not necessarily, and that factor, yes, is true, but it's not, you can't put it down, as some have said, to just the Trump actions and Trump policy interventions that has led to the weakening of the dollar, because it's performing well against all the other major trading currencies. So something, as I've just indicated, is happening. And we'll delve into that a bit more when we sit for a conversation. So we see now, this means very little if it doesn't reflect in your pocket. And that is why we've seen, for the very first time, at least as far as I can remember, that you have the traders, their union, their association coming out to say individual members should reduce prices because they've seen this sustained period of stability followed by strong appreciation, and they want prices to go down. All right, they want prices to be adjusted and reduced for all of us to begin to feel this in our pocket. And until that happens, we're not going to be feeling this in our pocket as much just yet. Inflation will begin to also obviously perform better. Prices will still change, but it will be very slow. We've seen that already reflected in the last inflation figures that was published. So that is good. But then another positive for the government is that we've seen S&P upgrading us from this selective default is now to triple C, which again is positive for a few reasons. And if you look at the last time we were at triple C was in August 2022, and then we dipped all the way into the red selective default when we, of course, could not pay some of our debt. We've come back to triple C, which is important. What does this mean in essence? It means that successful debt restructuring has happened, is one key thing that Standard & Poor's had looked at to upgrade us. Also, surge in gold exports, one of the key factors leading to the steady stability and strength. Strong economic growth outlook. Again, the growth outlook is strong, but our Bretton Woods institution have also downgraded our growth slightly down to around 3%, just above that, which contradicts government's projections. We'll see, but you see the strong points here that S&P is pointing at. IMF-backed fiscal reforms still working very well in the first quarter. So all that leads to the S&P upgrade, right? But many look at this and say, what are still the risk factors? S&P talks about fiscal slippages. That's one thing the government needs to watch. Rising public debt is another one, and an inability to refinance the maturing debt. They suspect that could be an issue. But some look at this and say, holistically, the finance minister obviously seemed to be doing something very quietly, but very effectively. Some have already tagged this atonomics. It's the reason why we're seeing the cedi performing this particular miracle and holding its ground against the dollar, against the pound, and against the euro. So what really is atonomics? Well, the finance ministry will join us for a conversation. They need to distill this for us a bit more. But most importantly, how do you sustain this gain so that you can begin to feel it in your pocket in a way that you can walk to the market and buy stuff and begin to feel the benefits of the cedi's strength over the last few weeks. My guests are joining me for a conversation here on PMX, so stay with me. And PMS is always brought to you by Syntex Tanks. It is strong, it is tough. Academic Times, Pepsi and Cavity Fighter as well. All making it possible for us to bring you PM Express. And if you're looking for a tank that will store water for longer, you need Syntex Tanks. My guest joining me for a conversation tonight is Dr. Tue Champong. He is an economist and political risk analyst. He joins us with thoughts on this very fascinating turn of events when it comes to the Cedi's performance against all the major trading currencies, not only the dollar. Thomas Ampem-Nyako is a Deputy Finance Minister. Dr. Joseph Obin is the President of the Ghana Union of Traders Association. Professor Godfrey Bokwin is Economist and Professor of Finance at the University of Ghana Business School. I want to start with the Deputy Finance Minister on this very important question. We had guessed what the likely causes are when you look at the Cedi's strength against the major currencies. From the Finance Ministry's point of view, what do you put this down to? Hello, Mr. Nyako, if you can unmute for me. Hello, Mr. Nyako, can you hear me? Okay. And I'll ask all of you to unmute for me because we want to have this conversation, make it more interactive. Kindly unmute so that we can have a conversation that is not interrupted by poor sound. Great. Okay. So I was asking you earlier, for the Finance Ministry and government's point of view, what did you put this down to? A long period of stability followed by a strong, very sharp appreciation of the cedi.
Okay, thank you, and good evening to the fellow panelists and all your viewers. You will recall that before the presentation of the maiden budget of President Mahama, the Finance Minister, Dr. Ato Forsen, led us to visit a number of market women at Makola. And one thing that came out from our interactions with the market women was that they wanted price stability. They wanted the cedi to be stable against the dollar. Every market woman that we interacted with stated this position in different ways. And so back in the office, it wasn't as though it was something that we were not aware of, but it was striking to hear market women reiterating this important point. And so every policy that we have been implementing has that in mind. And if you ask what has led us to this, one major thing is that in his budget, President Mahama's budget that was presented by my boss, he stated clearly that we were implementing an expenditure-led fiscal consolidation. And so we have constrained expenditure. We did not introduce new taxes. We decided to aggressively collect existing taxes to improve revenue. And if you have seen so far, we have successfully contained expenditure, and we have also improved revenue collections. A number of things, the confidence that the general public has gotten in Mahama's administration so far, leading to what we have seen, what people thought that we were not going to be able to sustain the IMF program. We have been able to secure a staff-level agreement, and that has also boosted the confidence level that people have in this economy. So a number of these factors are all playing into it. In your introductory remarks, I heard you making a very profound statement. We've had some people suggesting that the dollar is depreciating anyway against major currencies. And so what is happening here, it's not as a result of anything internal. We are just benefiting from the weakening of the dollar. But as you stated clearly, that is not the case. The dollar has weakened. It has depreciated about 2%, but the cedi has appreciated about 16%. And so that shows clearly that we are doing more, even though we are benefiting from the weakening of the dollar. You also made an important statement that I want to reiterate, that the cedi is not appreciating only against the dollar. It's appreciating against all the major currencies. And so that shows clearly that what we are doing is yielding results. The gold board, looking at the record so far, from January to date to April, has been able to export more than $2.7 billion dollars worth of gold. Comparing that to 2013, about 670, and 2023, about 670, and 2024, over 800 million. And so the gold board, I mean, is also the game changer. And we are estimating that monthly the gold board will be doing about $1 billion. That is what we are targeting. And so if all these continues, we are going to see the cedi being strengthened. What is important is not just the downward trend. We are aiming at stabilizing it. And so, yes, we will continue to push it downwards, but we will continue to implement policies that will make it stable. That is what our traders are looking for.
So to be clear, I've heard you mention a few policy interventions. One, you've mentioned the reining in expenditure. That's one. You've talked about the gold exports, which I touched on earlier. You've also talked about the policy that you've rolled out to ensure that the stability across the board on that. But stay with me. I want to bring in Tue Champong. Tue, you've heard the Deputy Minister there. Do you agree that this is a result of deliberate government policy, or this is a fluke, by the way, and not really down to because government was putting in any particular measure to rein in the depreciation?
No, it's not a fluke, and I've actually already written quite extensively about this. There are a number of things that are happening, some of which the Honorable Deputy Minister has spoken about, and others that you make mention in your introductory remarks. I think it's important, to sort of put things into context, right? So whatever you see within the forex market more or less reflect certain signals that investors place, or in terms of their expectation about future direction of any economy. Your currency is one of the biggest indicators of where things are likely to play out when it comes to whether one has confidence within your economy. And related to that comes down to borrow the word fundamentals, right? In this context here, there are two important things, and I'm going to borrow from the two interventions that have already come from yourself and from the Honorable Minister. So there's what is happening on the external market, the trade wars, the Trump-related issues, and the depreciation and whatnot. When you actually do the analysis, you realize that that is really not really what is driving the sharp depreciation that we're actually seeing, right?
You mean the sharp appreciation
of the dollar, or in other words,
okay, yeah, the dollar. Okay, yeah, okay.
Of the cedi. Forgive me.
Yeah.
The other more important factor is what is happening internally, because you see the rate of change that we have seen in the last 2.5 weeks, it's actually quite sharp, right? And that is not entirely as a result of what is happening in the external market. It fundamentally comes down to two things: what is happening on the monetary side and what is happening on the fiscal side. So the Honorable Minister talked about the budget, talked about the fact that we have seen some confidence coming back to the economy, the fact that we are seeing some sort of constraints or restraints on spending, and more or less this then being reflected in the signal that we're seeing, where you're seeing more or less a correction. So in the chart that you put out there, you see that just in the lead up to the election and after the election, the exchange rate, right, went up a little bit.
Yeah.
It stays at 15.5. And then you're seeing this correction taking place as a result of the improved confidence and the market signals that are coming through. But I think what is really at the core of what we are seeing in the last 3.5 weeks, in my view, is probably more on the monetary side of things. So what you're seeing with the gold sales and the gold board and also other interventions that the central bank is taking to actually support the local currency. And that for me, I think is really some of the big positive signals that we're seeing. So fundamentally, yes, we have benefited a little bit of what is happening externally, but that doesn't really explain the sharp drop that we have seen in terms of the appreciation. It comes down, in my view, to the improved positive signals that we're seeing both on the fiscal front and especially on the monetary side when it comes to the building up of the gold reserves and subsequently also interventions that the central bank is making within the market.
I mean,
And I think that it's above all is positive. I expect this to continue. I was playing around with the numbers before coming here, and looking at the long
that is a sustainability question. I'll come to that because that is a very important part of this conversation. But I want to bring in Professor Bohun. Prof, just on the back of what we just heard from Dr. Tue Champon there, he mentions that, of course, he's just hinting that this may last over the period. But let's talk about the fundamentals. Have the fundamentals changed substantively to sustain this gain?
Yeah, thank you very much. Good evening. Good evening, Honorable Deputy Minister, and good evening to the other panelists and our viewers. So, let's start from that point. What we have seen in the last 3 weeks is not stability. This is a disruption. Of course, we can say that, yes, that the city has recovered significantly past of its lost value. So if you see the disruption causes in the market and the uncertainty for businesses in the first place. So the FX inflows have improved and all of that. I think we should be able to come to a consensus. To what point should we stabilize the exchange rates for long? That is what the economy is looking for. The large swings, whether in terms of depreciation or recovery of lost value, is not good for planning. It's not good for planning. So we have to be able to communicate a certain policy direction to the market of how we want to stabilize. I'll give you an example. This is second quarter of the year. Budgets have been approved. Budgets have started across private sector and all of that. And then you see this happening and all of that. Of course, we've seen the call on traders to reduce prices, either the whatever stock they choose, last in, first out. We want to be able to manage all of that. But Evans, more fundamentally, is that, and I agree with the Honorable Deputy Minister, the economy, the shock therapy they applied, administered to the economy is playing a role. In my estimation.
Well, when you say the shock therapy, when you say the shock therapy, what do you mean?
Expenditure-based fiscal consolidation. We've shrunk expenditure.
Yeah. Even
in nominal terms. So in my own estimation, across, in fact, the recent data I've got, across all ministries, department agencies, is operating just around 60%. Okay. So now what that means is that, and the government is the biggest consumer spender in the economy. So what it means is that the economy's ability, or in terms of dollar usage, restricted. So with any increase in terms of injections, as Dr. Tue Champon said, from monetary side, in terms of injecting dollars, the absorption rate is very low. And therefore, that is likely to cause the CD to recover its loss. That's what we are seeing. But the question is, Evans, the budget, the government only has the leverage to operate this kind of budget in 2025. From 2026, 2027, government will have to operate its full budget, reflecting largely the promises and that you are not doing much this year. stabilize and all of that. So could be is fine. It's good news to some extent, but I am not in favor of major disruptions in the market. Now, I would prefer that we rather accumulate the reserves that allows confidence to be sustained for a much longer period of time, even beyond 5 years, even beyond 10 years. And all of that is good because you see, if you look at the data and you look at end of 2026 budget will show that we cannot continue on the path of expenditure-based fiscal consolidation to sustain the cedi. And even, let me tell you something, what is happening. When you see the exchange rate dynamics, you want to link it to whether this, there's also an improvement, significant improvement, interest rate point of view, and whether that is also translating to lower cost of borrowing, and how all of that aligns well with export diversification policy and globalization policy. You want to see all these things links up in build. Let me give you an example. How does this lend well to local production of goods and versus imported? So now the drive is to convince importers to lower prices. From November 2023, inflation on imported products actually rose higher than imported inflation. Better off rather importing, right, than producing here. What does that mean for the competitiveness of the private sector, indigenous private sector, those who produce here, and all of that? So in a certain sense, we can say that, yes, we've seen the inflows, and that is playing out. So in my estimation, for the rest of this year, yes, there's a future for this for this part.
So, okay, so importantly, and I want to go to the point that Dr. Church-Ampong was ending on. You also predict, do I hear you say you also predict, as far as this year is concerned, this strengthening of the cedi is going to be sustained?
But the appreciation, if we choose to call it that way, I would prefer to say recovery of lost value. We cannot sustain it on this path for long. Okay, we have to decide to stabilize it at some point.
Yeah, okay, but as far as we read into this, we're currently talking about 12.9. Do you reckon it will appreciate further? And at what point do you believe we'll have stability? First of all, do you predict we're going to have a sustained period of stability this year? And at what point do you think that stability will occur? Very briefly.
I think for this year, and also there's greater fiscal discipline from the fiscal side and intervention from Bank of Ghana. But we've seen this before. What we are interested in is
if you can, yes, that's the question. If you can address that for me. So, first of all,
for this year,
yes.
For this year, yes, there's a future for this.
Okay. So,
we have ahead. So we rather store or build reserves for beyond 2025.
Okay. No, I mean, forgive me. I'll come to 2025, but I just want clarity. The line isn't that good. So if you can summarize for me. So in other words, do you see sustained period of stability at least for the rest of 2025 as far as the cedi performance against the other trading currencies is concerned? You see that happening this year?
Yeah, and this will be contingent on stabilizing it at some point.
Okay.
And say that we are not interested in driving it down and all of that, because you see, you don't want to get to the point where speculation and others will think that, oh wow, it's better I buy because over a long period of time it will strengthen. And that is that's what I'm saying, that we should be stabilizing it at a point where there's sufficient risk to back that for long.
Okay. Stay with me, Prof. Stay with me, Prof. Let me quickly bounce that off to you, because you started that. So you agree with that? I mean, he's talking about this year, but he's seeing challenges maybe beyond 2025. Where do you put this? And I also want your take on at what point would we see that stability? Because now it's still dropping, it's still appreciating 12.9. In fact, last week I heard some businesses say they expected to appreciate all the way to 9 to the dollar. Where do you see it stopping and stabilizing over the period?
In fact, I was talking to some people today. They're even mentioning 10, right?
Okay.
Which was the level before the whole crisis started. Look, Prof has made some important points, but I've also played around with the data, and you can sustain this path that we're on. I think the current broader geopolitical macro environment gives the government enough room to do what they're doing. And my view, looking at the data and doing some time series forecasting, playing around with it, you are possibly looking at about 12 to 13 CDs for the rest of the year within that band. But again, this is just purely based on the data and based on what is happening within the broader market. Importantly, there are two data points that we need to look out for in terms of how this plays out for the rest of the year. 2026 is a different ball game. Number one, what the price of gold is going to be for the rest of the year, because that fundamentally is going to feed into both the reserve accumulation point and then whether we're actually able to sell some of those reserves to get additional forex inflows. The second point, which is related to the fiscal that we need to pay attention to, is what actually comes out of the mid-year budget around July of this year. So we would have then implemented the budget for about 5 to maybe 3 months, because we read the budget in March. And the numbers coming out of that, especially on the fiscal side, the constraint, and the extent to which that actually supports this narrative of improving investor confidence would really be key in terms of the signal that this sends to everybody within the economy. But the important point that Prof, myself, and the Honorable is making really is that nobody wants the drastic up and down. You actually want a band around which you play with the currency. And in my view, just looking at the data, playing around with it, I think that a 12 to 13 band is something that we could actually sustain quite comfortably until the rest of the year.
And I'll come to Dr. Obeng pretty shortly, because they are on the end of how we feel this in our pocket. I'll come to him pretty shortly, having understood what the projections are, because they need stability and predictability to sustain the prices reduced level for us. And so, Mr. Nyarko, very quickly, from the Finance Ministry's point of view, what are your own projections? You've heard the both economists say they expect sustained period of stability. As far as the dollar is concerned, 12 to 13 this year is going to be good in terms of keeping it strong against all the major currencies. What projections are you working with at the Finance Ministry?
Thank you. I don't think a particular figure is important at this point. As the earlier Dr. Botkin and the other panelists stated, what the market is looking for is stability. So no matter what level we are able to bring it down, whether 12, whether 13, whether 10, the most important thing is for us to make sure that we maintain it there to allow for planning and for businesses to be able to work well. And so that is what we are working towards. But Dr. Botkin made some important point about reserve accumulation. And that is exactly what we are doing. We are making hay whilst the sun shines. We know that the price of gold today is high, over $3,000 per ounce. We are also exporting enough gold. And so that is why you see clearly that our reserve has increased from the 6.2 billion in, I think, February last year to about 9.4 billion in February this year. We will continue in this trajectory to build more reserves, build more buffers, and that will help. In fact, S&P has recently upgraded us from selective default to triple C plus.
Yeah.
All these are sending very, very good signals. And in the mid-year budget, the finance minister is going to make very, very important announcements that will further bring the confidence that we need in the economy. People are wondering, how are we going to be able to meet the debt servicing obligations in 2027 and 2028? All these will come up in the budget review, the mid-year budget, and then it will give comfort to everybody that the economy is actually on the right path, and we'll be able to sustain this and get the price stability that we need for planning and for businesses.
With that in mind, I want to come to Dr. Joseph Obeng now. Dr. Joseph Obeng, you've now heard both economists say they expect stability in the short term, at least this year. You've had the the deputy finance minister say, the goal is stability, and they want to keep it stable for a longer period. And next year, the mid-year budget review will introduce more measures to keep this stable. Now, isn't that enough assurance for us to now begin to see reduced prices? Because now you can plan long term with the assurances you're getting.
Yeah. So I thank the panelists for whatever the trading community have been asking me, especially when I came with this announcement, that are you sure this is going to be sustained? That are you not rushing to come and tell us to transfer the gains and all that? So it's very important for us to think about how to maintain this gain. This gain will come to nothing if we are not able to sustain it. So it's very important that we talk around the sustainability, the predictability, and the sustainability around these gains that we are having. That's what now we have to be talking about. Take the advantage. Whether what brought us here is very necessary, but then how are we taking advantage of the gains that we've made and sustain it is very important, because this is what is going to push the other indicators that make businesses thrive. That the rate of inflation and then the interest rate. This significantly is going to bring inflation down and also affect interest rate positively. For me, this is how I'm looking at it. How are we going to take the advantage to enhance on productivity? Because if you're able to use the stability of the currency, that enhances on productivity and all that, will make us competitive, that will make us be able to turn the produce of our industry to be highly competitive. Then, of course, we are on the threshold to recovery.
I mean, and Dr. Obeng, you ask your members, traders, to reduce prices because of the gains that we've seen the Cedi chalk over the last few weeks. When we went to the market, though, they tell us that not yet. They are not ready yet to reduce prices. When can we see this reflected in our pocket, in the prices of goods on the market?
Okay, so it's because of what has happened in the past that we get some of these gains, the Cedi gain strength, and it's not sustained. And that's why Professor Burton is still maintaining that we are able to sustain it. That's the most important thing. Whatever thing that we have to do, if government put a prudent mechanism, if Bank of Ghana have put a very stringent controls of the forest and all that, we have to be able to maintain it and enhance on whatever thing that make us reach this far. Otherwise, my call for reduction will amount to nothing. It's very important. The trade that we do we do not do it in isolation. We do it with the consumers, because the consumers are our customers. And if they are challenged in terms of high prices, they are unable to patronize our wares. Business thrives on turnover. And so it's very important that if there's any gain, we share it with the consuming public as a show of faith. We have to show good faith and then also encourage them to know that
I mean, we are yet to see the evidence of your directive being translated to reduce prices. But you oversee the markets across the country.
We are not in a price control regime as you do.
I know. I actually wanted to ask you, based on your understanding of the trading market across the country, are you beginning to see some of your members reduce prices? Because we haven't found the evidence yet.
Okay, so the market forces will determine the price rather very soon, if we are able to sustain. The key word here is sustainability. If they have any indication that is not going to be maintained, then you do not expect. But the mechanism in the market itself, the market forces will determine the prices. Fortunately, we are in a very competitive market. We are not in a monopolistic market. It's a consumer's market rather than the seller's market. When you go to Europe, it's the seller's market. You go, the prices are fixed to the items, and you have to buy because the seller is determining. Here, you have so many traders trading in the same commodity lines, about 1,000 of them. The consumer have the opportunity to bargain the price and then reward the one who is selling at a cheaper price and punish the one who is selling at a higher price. So it means, therefore, that those people who will get the prices at a cheaper price and want to sell at a cheaper prices will sell. Because they cannot wait for those who are saying that we got it at a higher price. So this is the challenge that we have.
I know you're a trader. I know you're a trader yourself. Have you reduced your prices just yet?
Yes. So what I do is that I look at the trends, and now I see that if the price, the forest is around 13.5, let's say, and then I have old stock that I bought for 16. What I do is that at that time I calculated my price with about 16.5 because normally I make a little room for this. Now that the dollar has come down, I have to make some provision for those goods that I bought because I have a lot of stock. And so I will make a reasonable average. So from 13.5 now to the 16, then I'll come somewhere 14.5. And that's what I've instructed my staff, and they are working on it.
So when I come into your shop tomorrow morning, I'll see that some of your items prices have gone down.
Responding, yeah, that's the best way to do, because what I want to do is to make sure that I take advantage to enhance on my turnover by way of transferring the gain to the consumer, my customer, and then have an edge over my competitors.
Your competitors. Okay.
That's all.
That's a fascinating.
That's all business is about.
It's about, and really, this is what this conversation is about. Forget about the depreciation and the GDP. Is about prices reduction when you go to the market. And Mr. Nyako, if you can get this reflecting in the microeconomy, then you really would have taken a huge box, because that is really where the rubber hits the road. As far as the finance ministry is concerned, and you started by talking about the finance minister going to the market and talking to market women, I remember that, and that then influencing the policies that have led to the appreciation of the cedi and the stability we've seen. You must now work very actively, don't you, to try and get Guta and others to see reason in passing on the benefits to all of us, so that these market women that he interacted with will begin to see the benefits. And us too, obviously. Mr. Nyako.
Yes. Yes, and I want to thank the Guta leadership for the important statement they came out with, encouraging their traders to respond in the direction of the movement of the currency. It is important, and I want to appeal to all of them to pay heed to this. On our part, we want to give every assurances that we'll continue to keep the momentum to ensure that we stabilize prices. As has been said repeatedly on this platform, what is important is predictability and stability. As it is going down, we will continue to work hard to contain that. I know the finance minister has met with Guta and has given them all these assurances, and so we'll continue our engagements with them. Another important group that we will meet and we will continue to appeal to them to also respond is the transport unions. Because the fuel prices are coming down as the cedi is appreciating and the dollar is coming down. Its effect on the pump is also being felt. And so it is important that all these people begin to respond. You shouldn't only respond by increasing prices when things don't favor you. When things are favorable, you must respond in that direction also so that the consumer will also reap part of the benefit. That is what will help all of us to sustain this. And so the assurances, and in fact, Professor Bobkin made another important point that I want to respond to. He spoke about us being able to contain expenditure this year, and that next year it may not be the same. I mean, he was entertaining some fears. I want to tell him that, and everybody who has that genuine concern, that we have the backing of His Excellency the President to reset this economy. And so we are doing everything within our power to ensure that we meet this target. And so currently, we have established a compliance desk that is going to ensure that every MDA stays within their budget and implements their budget within the dictates of the PFM Act. And so we are soon going to publish a league table of all MDAs and how they have done within the PFM. And so all these things are happening. We have instituted that before you even start any procurement process, you must come to the finance ministry for a commencement authorization. So we will look at the budget provisions, your budget ceilings, and say that, hey, you cannot procure this because this is how much you have within the year. And so we are doing all these things to contain slippages and to make sure that everything is on course.
Yeah, and that is one of the things that S&P also touched on as one of the risks. I need to wrap up, but I need to give 30 seconds each to two and Prof. And Doc, to your champion very quickly. What the Deputy Finance Minister talked about there is what some are terming autonomics. I mean, he's going to publish a league table. He's going to make sure that MMDAs you spend within your limits. If it's not budgeted for, you can spend. Where do you see this? And every finance minister who comes in with a big idea always get tagged with some form of a brand, if you like. He seemed to be showing us a certain brand of what he wants to do. Quietly, but effectively, I guess I see the evidence is there. Is it overstating and exaggerating his impact already?
No, I don't think so. I mean, the evidence is there, and the evidence would always, show whether those interventions are working or not. And as we speak currently, the signals we're seeing indicates that some of the interventions are largely working. I think also the quick point I want to make is more transparency, more accountability. That's always more welcome. After all, as we say, sunshine is the best disinfectant. So if we can, get more data out there so we can see the extent of which MDAs, are conforming to the PFM Act, that is very much welcome. In fact, I think the work that Imani and others have done in the past on the fiscal recklessness index, can all sort of support
Yeah.
what the ministry is trying to
Yeah,
do. But that's certainly the right way to go.
Dr. Tejaba, Prof, very quickly, briefly.
Yeah, thank you very much. So I still maintain that apart from the shock therapy, Honorable Deputy Minister, if you see budgetary allocation to the critical sectors of the economy, this will not inure to transformation. Far too low. Look at the total allocation to the critical sector. You need to spend substantially along those lines, right? So you need to create that fiscal space. And that is why I'm saying that the spending needs to take up going forward, because we cannot continue at this pace. We have huge infrastructure and all of that. If you had reserves, I will not advise that you use it to drive the rates this way, because it may not ultimately translate to lower prices as people are calling for, because prices are downwardly sticky. We know that in economics, and upwardly flexible. So, and then the normal thing is I see when the CD came to about 15, people have adjusted in one way or the other, right? And plan with that. So I believe that we just need to stabilize it, accumulate reserves for a future spike or development. That is more concerning. And I think that is where the focus should be. If you look at the data since 1957, and the rest of them, you see the volatility. Large votes is not good for planning. And the rest of them. And ultimately, if we are pushing for import-dependent economy, we can celebrate this. What implication would this have for local production and competitiveness? How is this linked to lower interest rates so that businesses here can borrow at lower rates? Guta and the rest of them can celebrate because the CD is appreciating, and the rest because they are importing. What implication would this have for local production? This is where job creation will come from. What implication would this have for big tourist spenders who come to Ghana? Because when the city appreciates, it makes tourism a bit expensive. And that's what I'm saying. Let's look at the whole gamut of the macro levels and see the alignment so that whatever we are pushing, we don't take credit from one end only to cause disaffection from other sides of the economy.
And this is...
Honorable Deputy Minister, I agree, the fiscal discipline and the rest of them, I think it's very good. Look, I say that this current administration will do better. The president has signaled that, and I respect that. But I think that we need to be very careful so that we don't sacrifice medium to long-term survivability for short-term praise.
Okay, Prof. Bokwin, thank you very much. All of you, I'm grateful. And this is something that we'll return to if it's sustained. But I'm grateful that you joined us in General for evening.